What's going on, traders? It's been a while, man. I just want to say that I am back, baby. Do apologize for not being around, but sometimes, you just have to take a break and take it easy, clear your mind, and then come back again. And that's where I'm at. I'm back again, baby. Now, sorry if the video quality up there in the corner is not so good, but what can I say? It is what it is. But we're back and it's Monday. We're coming towards the end of August. And I can tell you now for a fact it has been definitely a very funny month. At times, there's been some really good movements in the market. And then at times, there's been absolutely nothing. But to be brutally honest with you, this is what it's like to be a trader, I guess. We have to make sure that we are doing as much as we can to protect our accounts, manage our risk, so that when the days do come, when the markets move, we are able to capitalize. So what we're going to do today, as you probably are very well aware of, is the start of a new week. We're going to be going over 10 pairs just to see what the market conditions are like, trying to get an understanding of what kind of trades we can be looking for, potential trades we can be looking for, and then hopefully set our week off pretty good, or at least good enough. Before we start, just want to say to you guys, if you can hit that subscribe button for me. For those that are not subscribed, welcome. For those that are already subscribed, please hit that like button for me. And yes, without further ado, let's get this party started. So I'm just making sure that my phone is on mute because I don't want to be the one that is cause for concern here. But there you have it. Okay, fine. So first pair that we'll take a look at is pound USD. Now, in terms of news, let me just double check this. We have news-wise, that was Friday's news. Okie dokie. So let's double check this. Now, I'm not really big on fundamentals, but what I'm very well aware of, traders, is that the news can have a massive impact on your trading, especially if you're in open positions. What I'm seeing here is we have, actually, I probably can just bring it to the screen for you guys. Free promotions for Forex Factory, why not? And just make sure that we've got this sharing. Yeah, absolutely, we have. Okay. So here you can see we are looking at Forex Factory. The news we have today at 8:15 is going to be for the Euro news. Be very, very careful of that. We then move on to after London Open, which is going to be red fold and Euro news. It's about time, actually, that we have some Euro news. We need to put a little pep in the Euro. For some reason, it's just been a little bit slow the last few months and that. So that's really good to see that this will probably jolt it up a little bit. I'm not sure how much of an impact it's going to have, but we shall see. I'm currently in a position at the moment with pound JPY buys. I'm considering the close here as we're getting a reaction from a key level. Currently 150.05, currently just over 10 pips in profit here. Yeah, let me share the screen. We've just lost the screen. There you go, traders. I'm not even going to edit that out. I'm currently in profit at the moment, the buy position. Well, just over 10 pips, to be brutally honest with you. I think I will lock in these profits, to be honest with you. Yeah, locked in those profits there. And just got a run and running at the moment. 149. Yeah. Okay. So for a first trade for Monday, I'm not going to regret closing that where I've closed it. I've got a position running still, and that'd be completely fine. Let me just break that down to you actually while we're here. So the first thing I was identifying on this market structure is how price, if you see gap down for the London Open, you know what I mean, not London Open, the market's open on Sunday. And then you can see through the night, we've had this correction. We've closed the gap here. And what you're expecting is for the market to continue to respect the highs of last week, which is this area here. What you see, and remember, when I'm in the markets, okay, and this is brutally honest, and you have to understand this, but when I'm in the markets, I'm not looking at this data in anticipation of looking for sells, because I mean, look, it's past midnight. and I'm sleeping. So I'm not looking for no sells. But what I do identify when I come to the markets the next day is what is actually happening. And you can clearly see here that the market structure was failing to break above for a long period of time. We expect the market to continue with the consensus of the market last week, which was down, showing signs of pound weakness. But as you can see, after the gap down, we had the close, we had price respect that level, and then we had price breaking above. Once you get that break above, you have to understand that this is not only now just a structural shift, this is also a behavioral shift as well. And well, yeah, I mean, as you can see, traders, look, price smashing above, closing above this key level here at 149.68. And what do we expect the market to do? To continue to make new higher highs and higher lows. So I entered this trade this morning for the 6 o'clock open. So I really like to trade around normally midday, so pre-New York. But on occasions, I'd say 10% of my trades are at London Open now. And the reason for that is because I just don't want to be waking up thinking about trading, especially where I live in the UK. I get the opportunity to trade many different sessions, and I just don't want to be thinking about trading half the time. So anyway, I waited. I was up today at 3:30, and I haven't gone back to sleep. I'll work the day now and get to bed early tonight. But some days I just wake up super early and I can't go back to sleep. It's a pain in the butt, but it is what it is. I managed to read a whole book in that time. Spent around 3.5 hours reading a book by Gary Vee. Very, very interesting book. And yeah, well, I'm here now. So I saw the charts, the structure of the market, which was the gap down, the bullish behavior, the bullish close, in anticipation that the market will continue to push bullish. Now, what I've got in the back of my mind here is this, that price can come back to a retest level here in the market in line with the overall trend, which is down. Until the market breaks some of these highs or starts to invalidate that the structure or the downtrend is continuing down, then of course, I mean, I don't want to start a debate here. In theory, you want to be looking for sells, but I don't just look at structure. I also look at behavior as well. Anyway, cutting to the chase here. That's what I'm seeing on this market. So I decided to jump in when I started to see the market breaking above the highs and clearly pushing bullish. Once I see the market clearly breaking the highs and pushing bullish, then this is the time that I'm jumping in the trade, because for me, I know that there's a very high chance now that with the sentiment of the market having a gap down and now closing that gap, breaking above previous highs around 149.70, and then continuing to push higher on the next 4H open, that there's a very, very high chance that the market's going to continue up. That's what I did here. This was the position, making sure that I have my stop loss below the structure of the market. In theory, this is where the market can come back to for the last tap before continuing higher. But if the momentum's up, what I'm expecting is this to continue. So I jumped in the trade for the 6 o'clock open, as I mentioned, and this is where I just close out the trade. You probably heard my MT4 terminal making a little bit of noise there. And I now have, currently just a small position running. We'll see what happens. I'm happy. Trade done for the day, and we'll see what the market provides us for the rest of the day. Anyway, I wasn't anticipating that to move up for this review, but it has, and yes, you got to see it. So let's take a look at what the markets are doing today, traders. I just want to bring to your attention some things here. The overall the overall structure of these market conditions with pound USD and pound JPY is bearish, but do not forsake the fact that the market conditions are currently showing bullish behavior. Two things that can happen in these scenarios, no other things. Two things. The markets are pulling back. Actually, there's three, but in terms of our trading, there's two things. The markets are pulling back for a potential retest before a continuation back to the downside. So this scenario here, you see playing out here. And the level we'll be looking for is always going to be a level where the market's reacted to the most. So it's not specifically one line. It's going to be an area. And this is potentially where I would look for the retest. If you're not the type of trader that trades against the structure based on higher time frame analysis, as I'm an intraday day trader, I do. But from a higher time frame trading perspective, if you're waiting for this bearish continuation, then you're going to wait for the market to pull back to, let's say, around 136.83. for that retest and that continuation. If you're like me and you trade both directions based on the current behavior of the markets today, and then the structures of your intraday timeframes and the patterns of your entry timeframes, then you can also look for buys as well. So currently we have around 2 hours and 30 minutes left of this 4H candle. London's due to open in about 30 minutes. By the time you watch this, the markets probably would have opened, and hopefully you'll be watching this moving into, let's say, an hour after London open. So what you can be doing, as every 4H candle has 4 hours in it, the best thing probably for you to do is either, well, depending if you're in a trade or not now, is just wait for the new 4H candles to close and looking to get into continued behavior thereafter for the 10 o'clock open into the New York session. All right. So what I'll be thinking now in the back of my mind, there's nothing to discourage me from taking buys at this stage from an intraday perspective. Current behavior is bullish. We expect price to come back to 36.83 before then the market decides whether it's going to continue with the overall downtrend or whether there's going to be a continuation. Granted, if the market continues to spike through this level here and start breaking above and closing above these structures, then it's a no-brainer that we probably are looking to see the market continue moving higher, unless obviously something comes about like news or an economic event when it shakes the market up. But as of now, we can see the behavior is bullish. So moving into the New York session, I want to see how price respects 36.83. As I said, I'm holding a position on GJ, so I'll be holding it up to as much as I can. And if not, if the market starts to react at these levels, then I'm going to have to accept the fact that the conditions are probably going to continue, as this is just a pullback continuation phase. So 36.83 is going to be my retest level, but a candle must close, must react to that level, leaving at least a good wick rejection similar to this before looking for continuation down. The shift on my lower time frames are going to have to change from being bullish trends to showing me that it's failing to break above. And then once that happens, I'll be looking for the shift down and then the retest patterns, etc., etc. If that doesn't happen, then as I said, the last scenario I'll be looking to play out today is a strong 4H close above 36.83. If we get that today or tomorrow, then I'll be looking for targets back to some of these highs here and here, moving forward for the rest of the week. I'm not going to be doing a review every single day. I think it's pointless. The market conditions change very, very quickly, especially from a 4H perspective. But what I'm hoping that this will do for you on Mondays is just give you a fresh perspective, some new things to think about. And I'll even be sharing some winning trades, losing trades, sharing some tips and whatever else for you guys so that you can have some thought-provoking things to work with for the rest of your trading week. Then my aim is to bring you one educational video as well. So that's a plan with pound USD. If I was you guys, I mean, like I said, you'll be watching this after London. See how price comes back to 36.83. If we start breaking through it, it's a no-brainer buys. And if we start to respect it, then we just follow the trend down, okay? As of now, if you're not in a trade already, I would suggest that it's probably best you don't take trades in midair unless you are planning to scale down and look for those retest levels in the market where price can find some sort of support that can add confidence to your trade. If not, just be a little wary. So that's GU, and let's move on. Next pair we'll take a look at is Aussie Dollar Jpy. Now, you know, we can see with pound JPY here that the sentiment in the market has been pushing bearish. This is identified to us the yen strength. Looking at Aussie Dollar JPY, we can also see yen strength here. There's nothing to give us any confidence in the fact that we could be looking to Aussie dollar for potential buying opportunities at this stage. But as we focus on structure and behavior, what we can see over the last, let's just say, 10 hours or so, that the overall behavior of the market has been pushing bullish. Now, what I like to do is I like to mark areas where I will find reasons not to take a trade as opposed to find reasons to take a trade, because personally, I like to be, rather than sorry, I like to be more cautious. What is the saying? I'd rather be sorry than right. Oh no, I can't even remember. Whatever. And I'm not going to edit that out. I use it all the time and I totally forgot it this morning. But the point is safe. rather than sorry. So here, what I would do, as opposed to putting my level where the bodies are, and this is subjective. I mean, everybody's approach to the market is different. I wouldn't view this as being broken, and I wouldn't view this as being a retest in the markets. Now, you can validate this, and this is what's really, really beautiful about trading, I guess, is everything is subjective. But look, as you go down to the lower time frame, you can now view this as your break and retest. I mean, I don't see nothing wrong with it. I mean, if it's part of your strategy, all well and good. But the problem is in this scenario, and take note here, if you don't identify why price is rejecting to a level, so we're talking about the previous close here, not the current, what you will find is when you enter that break and retest. So let me draw it in. This is, oh my goodness, this absolute marvelous level lesson here. This is why I need to keep doing these videos, because I do miss these lessons. But you take this trade, right, as a break and retest. And what happens is the market runs into a level where price is previously rejected. What happens then is you find yourself in a position where you're maybe going for a 1 to 2 or 1 to 3, or some of you traders out there going for some sky high risk to reward ratio trades. But let's say this is the, okay, let's just be realistic here. Let's say this is the best case scenario. You're going for a 1 to 2. What you will find, I mean, granted, you can go break even now, but what you will find is that the markets will tap into these levels, and this is what you will see. An area of sensitivity, as they call it, where price is just failing to break above. Now, I use that word sensitivity, not because I think it's an acronym that you need to be using for trading, because it's a real thing. I'm just saying it so you understand that this is the level where, unfortunately, the market starts to react to. Now, my rules usually are this, right? If you've got a 1-to-1 risk reward ratio to a level where the market can react to the area of sensitivity, then just go break even. If you don't, then avoid the trade. If you're going for big home runs, then it is entirely up to you. But I personally prefer to see the market breaking structures. And then once I've seen the structures broken, I'll look for the retest. I like to trade into the path of least resistance, both with buys and sells, as opposed to taking a trade because of FOMO and then thinking to myself, oh, guess what? The markets are going to leave without me and I won't be able to get into this trade. That's not really me. So what I would say now is this is how I'm looking at the market. We have 2 hours and 28 minutes left. I would say to myself, well, look, if the market can start breaking above its own high or the previous high in the market, where the market will find the most resistance or the area of sensitivity, then that's when I'm planning to buy it. Until it does, then I prefer to stay out. What I would then suspect is if the market starts to break these highs, then it just makes sense that we'll come back for a potential retest of the previous structures, which could be the low, or it could just be the high to form the double top. And what I'll start to say to myself is if the market closes above these levels, then guess what? There's a high chance we're going to continue higher. The sentiment is changing. We're either taking a deep pullback into some key levels, look for some liquidity here, or we're going to be reversing. Now, there's nothing to tell us that the markets are reversing right now based on structure on Aussie Dollar Jpy, and now looking at the structure on Pound Jpy. At the moment, it just is a little bit silly to say there's going to be a reversal, but we have to just be wary that the current behavior of the market is bullish. When we know that the behavior of the market is bullish, that means you do not sell into this level immediately. You wait for the levels to deplete or the market behavior to deplete, so from bullish to bearish, and then you can look for continuation trades back to the downside once you've got the evidence. Look here. The market came into a level in the market or created a level. This is an area of sensitivity, and I'm not going to go into too much details about this, right? But you can see that the market came into this level here, and we stalled for at least 12 hours before the market then attempted to push higher, failed, and then continued to move down. Here we have 4-hour close. There is nothing wrong with waiting for this candle close to identify a continuation of this overall structure, which is down. Anybody selling now, I mean, I don't get it. It's down to you. But you want my honest opinion, I think is really stupid. You know, I believe to become a great trader, you have to take heed of signs. And the current sign right now is the behavior of the market is bullish. And with GJ pushing higher, with Aussie Dollar JPY pushing higher, there is a sign here that we potentially are going to have some sort of yen weakness. It could be temporary, as I said, and we could see the continuations, but don't sell immediately just for the sake of selling it. If we knew where the liquidity lies and we knew where all the orders sat, don't you think the majority of us would be in a different position right now in terms of our trading and results? Of course we would. Somebody will be selling something somewhere, or to be honest with you, if they found out where all the orders sat, they wouldn't be selling it at all. They'd probably just be keeping it to themselves, making billions. We're not talking millions, we're talking billions. So let's just be a little bit realistic here. This looks like a beautiful level in the market to sell, but just wait for the market to speak to you first, and then after that, jump in. It's okay to be second or third. I don't want to be the guy that's first and then finds myself in a position where I get humbled. I mean, I've been humbled enough, and I don't think I need to be humbled when I know right from wrong. So anyway, this was my trade on GJ. Close it out in a good area, to be brutally honest with you. I still got a position running, and the rest is at break even. We shall see what happens with this one here. I suspect that the last point of contact for my trades is going to be in and around here. To be honest, London Open in the next 25 minutes could see this market fly straight through it. I'm not bothered. I got what I needed out of the market, so that's the main thing. But the point here is this. I think this is the area of the market which determines what is going to happen, because we've had on 2 occasions, I mean, granted, this is a very strong impulsive move. More often than not, it's going to be based on news. But we've had 2 4H candles pushing back into this level around 150.35, failing to break above. I wouldn't be surprised if there's a third one, which is the current candle that I bought, pushing into this level. And I think that this will be the last point of contact before the market either does one or two things. Continues to show signs of pound strength breaking through this, or potentially yen weakness, or we're going to see a reaction from this level, which will be the wick rejection depletion, and then we'll see a continuation of this trend to the downside. There's no other options I think you'll be looking for today with this pair other than seeing how price reacts to 150.35. If we respect it, again, just like we spoke about for Aussie Dollar Jpy, be mindful of the market conditions, which is currently bullish behavior, then wait for the market to deplete that behavior, and then look for those intraday patterns to look for those sells. I'll remind you one more time what that looks like. That will be a trend up, price failing to break new highs, then price violating the current trend, which will be the brick wall. And then you're looking for a retest of previous structure, or you're just looking for a new trend to form, which will create the retest. And then, as you all are very, very familiar with, the new downtrend, which will be the high, low, lower high, and in anticipation of the new lower low. So there we have it. Moving forward, taking a look at USD Swiss Franc. I mean, look, this pair has been really, really funny. We've had consolidations that turn into big, strong down movements or downswings in the market. Then you have consolidations that move into upswings. Now we have another consolidation. To be brutally honest with you, we could flip a coin here and have a little bit of fun and decide where this market is going, because with the consensus across the market, there are a lot of easier pairs to be trading. And to be brutally honest with you, I mean, I wouldn't see why you'd want to trade this. And let me just make sure I'm sharing the right screen here. Could you imagine doing the whole of this without recording it? So fine, that's that. Yeah, I mean, guys, look, pound at the moment, Aussie dollar at the moment, yen at the moment is a lot easier to trade. USD Swiss franc, I mean, we'll see what the dollar has got for us in store later on this week, but as of now, back burner. You know what I do with these ones? I just go red flag for the day. Once I've got the red flag in, I just know I'm not going to be trading it. I'll walk away and come back tomorrow and reassess the situation. Next pair we'll take a look at is Aussie Dollar USD. So look at this. This is the beauty of identifying currency strength here. Look at USD Swiss franc. You'll say to yourself, well, hold on a minute. What's happened with the market conditions? The dollar's not showing signs of strength. Swiss franc is not showing signs of strength. Where is this market conditions going? Then you go over to pound USD and you say to yourself, wow, the dollar has been super strong all last week. And look at the market conditions. They've been pushing down. Then you go over to Aussie Dollar USD and you're just like, dollar strength, what's the dollar doing? And then you go over to Aussie dollar and you're like, huh? The dollar's strong. Now, what you have to understand here is that there's only two ways to look at this. The dollar is showing strong signs that it's strong, which will be consistent throughout the market conditions, meaning this should go down, this should go up, and this should go down. Or we are identifying a weakness on the opposite side, i.e. Aussie dollar. Now, to add confluence to this, if we go over to Aussie Dollar JPY, what are we seeing? Aussie dollar weakness. Now we add confluence to Aussie Dollar USD and we identify very similar structures to Aussie Dollar JPY. We also add the trend that's will work in our favor with this analysis and the fact that Aussie dollar is weak. And we can say to ourselves, well, to be brutally honest with you, this is how easy it's going to be to trade today. Easy doesn't mean that it's going to play out, but the idea behind it is this. As long as price continues to respect 71.74, which is the area where price has created the most resistance, then there's a very high chance that we continue bearish today. However, if the market sentiment continues to push bullish based on the market gap down, the correction, and now the continuation to the upside and breaks above 71.74, then there's a very, very high chance that we're going to continue higher into some of these areas. Once that happens, what you do is you go over to Aussie Dollar JPY and you make sure that the markets are respecting the levels here around 78.83. Then you find the confluence over here and identify that the market's respecting 71.74. And if that's the case, then you can sell either or. But if it starts to break above here and then it starts to break above here, then there's a very high chance we're going to see these market conditions push higher. Use those with confluence together just to understand the behavior and structures of the market at this moment in time, and you'll position yourself in a great place to get phenomenal results from the markets. Me personally, I'm a big fan of structure, but I'm also a big fan. I heavily rely on identifying a currency strength or weakness and then working with the behavior on that day. I really like to keep my trading simple. I'm not in this for the long haul. I don't care whether the markets go back to 72.41. I just need to know that I'm identifying the strength or the weakness and the current behavior, and I'm getting in. Again, every trade you take will have a probability of winning based on your collecting data, your back testing, i.e. a breakout position after a previous 4H candle close bullish to the upside with Aussie dollar showing signs of strength, pushing higher, probably give that trade a 72% chance of winning, right? Once you have those statistics, which you should be gathering yourself, then you can have a lot more confidence that you can take that trade, maybe be a little bit heavy with your risk or be a little lighter depending on the probability of that trade winning. The point is this: once you identify what the market's doing on that day, or for me personally on that day, I'm willing to go in and I'm always ready to accept my risk, because thereafter you're just letting the markets do what they have to do. The results will be the results. So that's my plan with Aussie Dollar USD moving into today. Now, taking a look at USD JPY, what you will find, right, traders, is when you bring two strong currency pairs together, and you hear me say this every single time, so this shouldn't be new to you, but once you bring two strong currency pairs together or two weak currency pairs together, you will find that the markets will move sideways. USD Swiss Franc is moving sideways. We haven't gathered much information in terms of USD Swiss Franc here, but it's moving sideways. USD JPY is moving sideways. And if we take a look at gold is moving sideways. Excuse me. Now, with that being said, we can clearly see here that we're not, or the market is not illustrating to us that we can fully rely on the dollar right now. Even last week when the dollar was strong, look what gold's been doing. It's been moving sideways. The fact that these two are opposite correlating pairs, you can clearly see here that the behavior of these two market conditions are the same. Safe haven currencies, investors flock to gold. You know, we should see some movement. Don't know. Is there stability? Is there something lurking in the waters that we don't know about? Is there going to be another flash crash like last week? Was it last week or the week before? Whatever, one of those weeks. Do you know? We don't know. When the markets are like this, it's best to stay out. And the point is, avoid guessing. We have other pairs we can be working with that we can identify cleaner structures, identify areas in the market where we could potentially be looking for trades. And to be honest with you, if the market conditions are moving sideways, then it's probably best to stay out. So long and short of it is USD JPY will also get the red flag like USD Swiss Franc. Next pair we'll take a look at is Euro JPY. Now, I better mind what I'm saying here because the news is coming and it's going to rock Euro. From a technical perspective, and listen, from a technical perspective, it only makes sense that if price trades below this level here, then we're going to look for continuation sells. What gives me that bias is a range. So price bounces from the floor to ceiling, ceiling to floor. The fact that price is showing signs that it's failing to break close above on many occasions. And now current bullish behavior is failing to break above. So if the market conditions in the next 2 hours and 14 minutes closes bearish, then there's a very high chance that you'll see that continuation bearish to the downside. If the news comes and rocks the market, then you might see bearish and bullish movements. But of course, from a technical perspective at this moment in time, there's only two things I'm looking for. If price can sustain a break above this area, then it's clear that the euro is showing signs of weakness. The yen is showing signs of weakness, which will be a confluence across the board. And we can look for continuation buys in line with Aussie Dollar JPY and Pound JPY. But if the price starts to respect this key level at 128.80, then guess what? We have to look for the market conditions to continue with the overall structures from a Forex perspective, which is down, and look for those sells. But you must wait for the market to close bearish in anticipation for the market to continue bearish. So with that being said, they're the two options that I'll be looking for here on Euro Yen. And I was stopped out of my runner on Pound JPY, which is completely fine at break even. But we closed the day out with 2R or just shy of 2R. And I think that is an absolute win. Okay, now moving forward to USD Cad. Bit sticky here, isn't it? USD Cad was the absolute go-to pair last week. It was unreal. To trade it was just so beautiful. I mean, I got into this position, I think 5 times. And for the majority of the positions I got in, we were making money on it. Now, what is the market doing? I don't know. The markets are not showing that the dollar is fully weak yet. What I think I would prefer is just to see if this is a correction. If this is a correction of this overall trend, what you can do is you can isolate the level where the intraday levels are creating the retest. You may not be able to see this now, but if you go down, you'll see it. This is the deep pullback retest in the markets. If price is respecting this, then all well and good. What I personally would say from an intraday perspective is that even though the behavior is down and the trend is down, we still have one last hurdle to get over, and I believe it's this level here. If the market starts breaking through this level, I think you have a true confirmation that the market behavior and sentiment is flipping bearish. But if the market doesn't break this level, then what I will say is I need to see price respect this level. I need to see the behavior shift back to bullish. And then once it shifts back to bullish, I can potentially look for a continuation like this. Only until this happens will I be satisfied to look for continuation buys, because as I said, I'm a big believer in behavior as being the number one reason why I would take a trade. And at the moment, the behavior is bearish. So if 27.55 is respected, all well and good, let this 4H close, then I'll look for the switch back to the upside, the flip back to the upside, and look for these buys. But if we continue crushing through these levels now, I think it's time to say, guess what? The behavior is truly bearish. It's time to get in, because personally, I don't want to keep seeing this go down without getting into the markets. That will just add confidence to whatever I'm looking across the board here. So if G starts to push up, Aussie Dollar USD starts to break through that resistance, then that will add the confidence I'm looking for if this starts to push down. We shall see, but it's still early days, and London is still to open to decide what the market's going to do. Next pair we'll take a look at is Euro USD. So as I said with Euro Yen, if the market respects this level, it is a no-brainer. You will have to look for sales because Euro, again, is showing no signs of strength. But there is news that is coming out in the next 11 minutes and then in the next 41 minutes. So if we start smashing through these levels with good news for the Euro, then there's a chance we're going to continue higher. But if the market doesn't move the markets, or sorry, if the news doesn't move the markets as much as I'm anticipating it in my head to do, then you just wait for this 4H close. If we close bearish, it's a no-brainer. As long as you find that confidence with Euro Yen, also failing to break above, we can just look for those sells down, just banking on the fact that the Euro is weak. Not so much the dollar is strong, but the Euro is weak. And we can sell this as part of a consolidation pattern, behavioral pattern, or identifying market consensus, which is Euro weakness. And that would be my plan with Euro USD. Final pair we'll take a look at is gold, and I'm sure you're all well aware that this was going to get the red flag. I don't care for any break above any consolidations or below. Right now, I'm just staying away until I understand what's happening with the dollar. So that's my analysis for this week, traders. I hope you've enjoyed it. Some really useful tips here. And if you skip through any of the market analysis for whatever reason, just go back and watch it, because whether you're here for those pairs or not, I can promise you, you will learn something that will be of benefit to you in your own trading. I just want to say I'm really happy to be back. I'm going to do my very best. I'm usually very consistent. But as I said, I need a little break, but I'm feeling refreshed. And we're going to absolutely smash it for the last quarter of this year. And I'll do my best to support you. Smash that like button for me, traders. Subscribe if you've not already subscribed. Turn on notifications. And until next time, continue to trust the process. Bye-bye for now.